Good morning. This is the Oak Bloke, and I'm going to be covering ONDO InsurTech today. It's Bank Holiday Monday. None of what I'm going to be covering is advice. It's just um, my view on a stock that I hold. I've kind of only bought into it relatively recently, and just start by saying this is my Substack, so you can find this at oakbloke.substack.com. 599 articles. This one's going to be the 600th, and I always feel a little bit nostalgic when I get to sort of sort of triple figure zeros, and sort of I did a big article at article 500. I did a big article at article 300, which was assessing my long-term performance. I did think about doing one for this 600. So just quickly sort of say, it's interesting. I mean, obviously none of this is advice, and you make your own investment decisions, but um, just interesting that at article 500 I'd covered 121 different companies across 500 articles. I haven't recounted as to how many there are now at 600, but it'll be more than 121. Some that I like, some that I dislike. I am merely speaking my thoughts aloud, which I believe helps me become a better investor. I'm just a private investor. I'm not connected with any one of these companies in actual fact. I of course am probably talking my own book, and the other perhaps thing to say is, sorry, let's just quickly get into this. Spartans fell and only 12% return. Don't worry, no Spartans were harmed in the making of this article. 12% return refers to the fact that the average stock price return at the time I wrote this article, which was back in February, was that if you'd actually um, bought the idea on the day that I wrote the idea, the original date that I wrote the idea, as to the 17th of February, I think it was, you would have made an on average a 12% return, which is pretty cool. And I don't make any warts and all, that if there's some that lost a load of money, then I'd rather just know about that and like what lessons can I learn from that. And equally, the flip side is that some of them at that time, I haven't gone back and checked this for today, but some of them had doubled. So 5 out of 121. That's pretty cool. I quite like that. But you can't win them all, as the saying goes. So um, yeah. But there was also this idea of max gain. In other words, what I was also doing was, rather than saying, because obviously the day I wrote the article to the day that I reviewed all my articles, like that's a completely artificial construct. Uh, it assumes that the very day I write an article, you go and buy it, which I'm not saying you should do. Like, you choose your own timing. This is that's your responsibility. You choose your own date to sell. If you sell, that's your responsibility. That's nothing to do with me. But if you had done that job perfectly, because this was the idea of max gain, um, that if you achieved ideal timing, like, I also sort of thought, well, what would that look like? And I mean, the number of double baggers um, would grow by more than 2 times. You'd have made 11 double baggers if you timed your buy and sell perfectly. So 10% of the ideas I'd written about would have doubled in price. And of course, since February, I mean, we've had the flash crash, and then the Lib Day crash, and we've had a sharp spike back upwards. So who knows? I mean, maybe that number would be higher, maybe that number would be lower. I suspect with the opportunities in the market that there's been some great opportunities. And of course, for example, the price of gold back in February was what, 2,700 maybe. So now it's 600 higher, and of course that ratchets profit. So I suspect there's a couple of ideas that have anyway. I did think about writing today's article number 600 as a sort of another one of these, but I don't know. I might do that at article 1000, or it might be at article 750 or 800. I don't know. I'll see when the inspiration takes me, but it was a lot of work, as you can imagine. 121 articles. There they all are there. That's every article every company I've ever written about. And you can sort of see the green, those are the double baggers, right to the ones that made zero, right the way down to some that made what, minus 100%. So this, worst to least. So toast, that one's near to toast. I mean, that one's certainly gone down. But I have called time on that because I did sort of like, I got to a point with Bellascura, which was one of my Oak Bloke 2020, that I said, "Do you know what? No, you know." But interestingly, look, max gain. If you had timed your perfectly, um, you could have double bagged that one. You'd have had to be very, very talented and lucky, or perhaps a bit of both, and perhaps one or the other. But this was the point with max gain, is that because shares can oscillate, if you um, whether you use technical timing to achieve that, or something else, then and there's others as well. I mean, we know that 9.9, that digital 9 is also down further. That's down at about 8p today. Don't really know about Phoenix. Cadence is more or less at about that level, but again, that's actually one of my Oak Bloke 2025 ideas. That's the one that's trailing. These guys, Andrada, these are substantially back up. These are at about 3p. Whereas I first wrote about them at 5.5p. And the other thing this, by the way, does or doesn't reflect is this was the date of the first article I wrote. So I might have written an article and then wrote another article where I said, well, this is now down 75%. It looks really, really attractive. And then it might have gone up from a further article. Do you see what I mean? So like, it's not sort of, I'm not picking and choosing my article dates. I'm saying this is the date of the first article. And the other, actually, sorry, yeah, the other thing I also did was I in articles I would either just be very clear. I hate these. I personally despise these people that write investment articles and they say, well, it might go up, it might go down. I don't really know. Well, what's the point of saying all of that? Like, waffle, waffle, waffle. It might go up, might go down, and you read pages and pages of I don't, but essentially the person saying I don't know. Like, these are the arguments for, these are the arguments against, and then obviously that's important. But I feel that if you're going to write about something, you might as well just sort of come to a conclusion, and maybe actually the conclusion would be that you sit on the fence. So I think where I say then hold, that's kind of, sit on the fence. But like, you can't write every article sitting on the fence, otherwise you're just irritating. Well, irritating me. Maybe you quite enjoy reading articles where people sit on the fence, that they don't give you a clear picture of what they believe will happen. And obviously people have got to separate out their facts and opinions. That's the other thing that gets on my nerves, is sometimes people can present things as, oh well, it is the case that this is going to happen. Well, what, you got your little crystal ball, have you got your Palantir, and nah, we don't, none of us know the future. All we can do is extrapolate from the past, look at the facts and evidence, weigh them up, and come out with a. But and I'm guilty of it as well, that sometimes I might say this will, or this is, with sort of using words of certainty, whereas I suppose, on reflection, I will sort of, sometimes people say, well, what do you mean this is going to happen? I'm like, well, yeah, you're right. Actually, I don't know that it's going to happen. This could happen. And I'll go in and change my article to put the word could rather than is. I don't get it perfectly right. But as I say, that is something else that that irritates me. But look, the point of this video wasn't really meant to be about things that got on my nerves, or even about Article 500. It was meant to be about ONDO InsurTech. But I sort of feel I'm on a bit of a roll now, and I'm 10 minutes into doing a video about something else. So I'll probably just carry on with this idea. My last video was just talking about the Outlook 25 and like where do I see those going from here, and you know what you know, do I regret any of them? Like, is there any that you know, just that, just pontificating on those. I'm actually going to do my InsurTech article as a separate one. I otherwise people will be listening to 10 minutes of me waffling about something completely unrelated before I actually record this video. So I guess yeah, I mean let's kind of, I mean obviously I've not written a new 500 article, but it'd be interesting actually just to sort of see whether there are, I mean, like, who are the biggest gains back then? Well, yeah, interesting. Look at this. So, I mean, it's a bit sad that I just know these numbers off the top of my head, but I might not know them all. Actually, we might have to look up a couple of these. But I know, well, I think I know that Guardian Metals is up since that article. So I wrote about it when it was at 9p, and in February it was 33p. I think today it's about 40p, 39p, if I'm not mistaken. Yeah, there we go, bang on. 39p for good old Guardian Metals. So I mean 257% today is actually sort of 300 and something percent. So that one's you know, gone even higher. Kazira, I mean, I know Kazira, again, if you time that perfectly, that's gone above 2p a share. Still really like Kazira. I have taken some money off the table on that one because I was very heavily, because I looked at the you know, you can go back and see all my past articles where I said, well, you know, let's look at heavy mineral sands across the world, and like these guys have got 50% heavy minerals, whereas most of these projects are like 5%, you know, 5, 6, 7%. So when you've got 50%, I mean, you're literally just scooping it into a bag and making money, and quite a lot of money. You know, and that one is sort of, I mean, they have yet to release commercial results and so on. So it's and the other news flow since February actually is that they've received adjudication on the money that they're owed by the Hebe construction, the Chinese Hebe construction folks. So again, you know, that one, there's lots of reasons that actually 1.7 is pretty good, but actually you'd find that Kazira's pulled back quite a bit, so it's kind of starting getting back to a price point. There we go, it's actually down below the 1.7. So they've received a legal judgment on the arbitration, and that is binding arbitration. So what that means is that that there, you know, there's now sort of a court order that says, you know, you have to give this money back, and that court order is in Namibia, where Hebe have got assets and got operations. So the Namibian courts could I mean, I'm not a Namibian legal expert, but I mean, it would be normal practice, or kind of not wholly untoward for them to be able to take action now to repossess assets and repossess, you know, sort of you know, any money that they have in Namibian based banking. So the legal the legal outcome is a really positive move. So for this to be actually at a lower price than before it actually had that, and plus it's you know, it's um, had an offtake agreement, which again I think was probably post period. So I mean, they've got the extended mining rights. So again, that's a positive. They've made their first sale of 10,000 tons. That's a positive. Like, none of this was in the price or at least it was the expectation of it was in the price back in February. Shipment um, of 10,000 tons, and that exceeded the expectations of the 6,000 tons. So all heading in the right direction, all heading very, very positively, and they're waiting for the mining rights, and things have taken a while. Things have taken a while in South Africa to get sign off and so on. So again, that lots of reason to feel positive. I know for a fact that Pinewood's nearly at £4 now. It's about 388, I think. So did some work on this. In fact, it's actually fallen back again. It's interesting. It was at 390. It's now at 370. But these guys recently won a further contract. In fact, I need to write an article about this, because this significant new contract award and this acquisition of the AI platform, all very, very positive. All very. This is an Outlook 2024 idea as well. So both of those are Outlook 2024 ideas. Guardian isn't, but Power Metals was, and Power Metals owns 20% of Guardian. And well, don't get me started on Power Metals, because that is the most depressed share in the world of depressed shares, and like. But anyway, I won't make any weird noises like that. Base minerals, BSE. That's now over to UUUU, which is Energy Fuels, or EFR in Canada is listed in US as UUUU, and EFR in Canada. I mean, that went up 20% last Friday. So again, it's difficult to sort of say. I mean, really, that is a locked-in gain of 26p, 100% double bag. Rev bar, I think, is toast, which is why I clocked up. So this is an example where, I was bullish about some shares and bearish about others. Revolution Bars, RBG, I looked at and I thought, nah, I don't trust this to be reliable, and so proved to be the case. I think they went bust. In fact, I need to check back on that. Regional, I was sort of bearish, and then watch. I think that one's now at about 10p. That's gone down further. So I suppose I should have not sat on the fence on that one. I should have remained bearish, and it would have clocked up further gains in the sense. Now, I don't say that I'm shorting these shares, by the way. It was just I didn't like them. I wouldn't put my own money in them. I mean, obviously, if somebody goes out and shorts them, that's up to them. But it's not. I'm not saying I'm shorting them. It's just I don't believe they'll go up, and so proved to be the case. So I clock that up as a gain, as a reverse gain. Anyway, that was my logic. Microsalt, I mean, that one's down, but hasn't kind of been able to. What's the word? They haven't been able to verbalize or tangibly return profit. That's the thing here, that they are showing that they've started shifting vast tonnages of sand. Sorry, start again. Salt. I was going to say sell sand to, well, I don't know who you'd sell sand to, but no, it's salt. So they've got a super fine version of salt that they've got patents for, and if you can make like salt that's like icing sugar, well, you don't need as much salt, because the problem with having big chunky bits of salt is that you need more of it on your chips or on whatever food you are consuming in order for it to taste salty. So if you can get that saltiness with the equivalent of icing sugar, I've got a tub of Microsoft. I use it myself. It's jolly expensive, but it's worth it, because obviously if you've got if you want to sort of look after your health, then cutting down on your salt's a big way of doing that. Anyway, I'm not going to go through every one of these, but Chrysalis is sort of about the same. Sentiment got bought out, so that one I think again is a locked in. Hochschild, I actually called time on that at £2.35. So yes, that's gone up further. That's an example of a gold holding that's gone up further. And there's some others. I mean, I was sort of cautiously bearish on Zote Foams. Zote Foams is definitely down. I did sort of like it, but I just thought this uh, new type of packaging that they were proposing was the stuff. Oh, actually, no, I'm now history's against me. So I sort of said, that it was bearish at this price, and so I was right. But since then, it's reversed itself. So there we go. Interesting, very, very interesting. Yeah. So look, I mean, these guys have, yeah, so record sales. Although, I mean, you do have to wonder on this one how impacted they are going to be by tariffs, and no, they themselves operate out of Vietnam for their trainers, and of course, one of their key customers, Nike. Um, are they going to be reshoring? And if they are reshoring, are they going to take Zote Foams with them? I guess that would be my concern. I wonder whether we've got any kind of clues in here. I mean, maybe I just need to go away and read this and maybe write an article about it rather than pontificate about it whilst you get bored. But yeah, look, I mean, these are all sort of generally. I mean, I can see Ocean Wilson's is up, Nubdug. Obviously, I tapped out at that 41%, locked that in. Grow, that's actually down. I mean, Grow is an interesting one. Um, yeah, I think most of these are. Now, another interesting one was this one here, CMC Market. So I was negative at £3.32 and it had dropped to £2.18. I wonder if it's still at that level, CMCX. So if we go in and have a little squiz, there we go. Yeah, so it is sort of at £2.68. So it has bounced back from its February lows. So anyway, it's just interesting to kind of go back over some of these and just see whether um, you know whether more Spartans would return or fewer Spartans return. It looks like a bit of a mixed bag. Some that I'd make lower gains on, and others that I would make higher gains on, and certainly some of these. Yeah, Plexus is pretty much where it was before. Infinity's a little bit higher than that, and yeah, I was bullish about that one at 23. I remain very bullish about that one. I wrote a couple of articles about that, and I think my last one was called "The Oak Bloke Overlooks," because I think somebody said, "Oh yes, you've missed this, and you've missed this, and you've missed this, and you've missed this," and I was like, "Well, yeah, I haven't written about those things, but they're not kind of front of mind. They're not the near-term opportunities, and just kind of say, oh well, there's a chance that it might get this and a chance it might get that. There was stuff going on in Australia that it's not going to move the dial as far as I'm concerned. The stuff that's going to move the dial is the stuff happening in the US and the stuff happening in the UK. The UK because of LDES, and then the US because of the IRA, and just there's a sort of certain level of momentum there, and just power. I mean, the amount of power growth that I'm seeing through the numbers, reading things like the EIA, which is a US government agency, lot of stuff going on like that the growth of energy in the US is pretty spectacularly large. And when you consider that Trump is boasting that I think his last boast was a 12 trillion investment pipeline. A lot of that 12 trillion is not services, it's product. It's manufacturing. That's what he's aiming for. He's bringing back manufacturing to make America great again. Well, what does manufacturing use, folks? It uses energy. You know, the heat, I mean, that's the other thing. In fact, I'll just quickly show you a little bit around this article. I mean, this is the forecast for water scarcity for the US, and obviously water scarcity happens because it's hot and sunny, and that causes dryness. I mean, I don't want to say the obvious there, but and I showed in one of my diversified articles how the outlook for the I think it was NOAA, the weather forecast, sort of like the Met agency in the UK is NOAA in the US. Um, knows when to bring out the ark. Yeah, so the North American Observation Office for Weather Meter. I don't know. Anyway, um, they were predicting a very hot summer for 2025. So yeah, again, in fact, let's just quickly go and uh, let's go and quickly have a look at what the weather forecast is doing out in the US. So average temperature deviation from normal. Well, there we go, folks. Look at that. So look, beyond red raw hot, it goes brown. Brown is even hotter than red, which kind of I suppose it's because it's parched beyond. But look, that's sort of what 18 Fahrenheit, so that's what 10 Celsius hotter than normal. There are a few bits on the edges that are sort of like at naught or -2. I mean, a little bit there that's -4, so that's sort of 1 or 2 Celsius below normal. But a big chunk of the US Midwest is 10 degrees above normal. And what does that mean? I mean, this is an interesting one because these are the mean temperatures, but this is daytime and nighttime. So the average of daytime and nighttime, I mean, 70 in Celsius is just over 20. I mean, it's about 21 Celsius. So if it's 21 average, that's something like, I don't know, 15 in the night and 25, 26 in the day. And what, we're in May, like we're not even in the summer yet. So again, I think that we're going to see a very hot summer, and a hot summer means more energy because it means more air conditioning, more power. So I think the outlook for power is very strong, and therefore the beneficiary to that will be Infinity, because the demand for long duration batteries will be so much higher. Okay, so anyway, I think we're pretty much there. I was bearish on VSL, and I know that one. I spotted this. I think it was on Friday that this had dropped dramatically. So my bearishness at, what was it, 40p, or no, to be fair, I think I called time at about 25p. It's dropped 40% since then. So I thought, yes, there we go. I was right to be, I read about how they said there was uncertainty with one of their e-commerce holdings, one of their major e-commerce holdings. And I looked at that and thought, and their forecasting, where they've sort of said this is our profile of cash flows, has just leapt around. I mean, the whole reason I was positive about VSL was based upon the fact that they said, look, this is our forecast cash flows. We're going to get all this chunk of money in 2024, this chunk of money in 2025. And I looked at it, I ran the numbers, I was like, well, like, you pretty much get your money back by 12 months. So that looks pretty nailed on. But of course, each time they issued another update, they were like, oh yeah, the 2024 stuff, that's now going to happen in 2025. That 2025 stuff's now going to happen in 2027. And these numbers were sort of like, it was almost sort of like just flowers growing out of the ground, and then withering. Like, there was no rhyme or reason as to why these numbers were changing, or what, and I just lost faith in their grasp of reality, I guess. I mean, I don't want to sound rude, but like, there was no reconciliation. There was no decent, like, this is what's going on with our holdings. This is sort of why, all of a sudden we're like 3 months ago, we were predicting we were going to get 50 million of cash, and now all of a sudden we're saying we're only going to get 10 million of cash. It was just, here's 50, and then the next update, here's 10. Nobody knows why. I mean, that's not, like, as far as I'm concerned, that's not good enough. That is not good enough to just be like, just whatever. Like, whatever is not good enough. I think once you lose faith in some of these companies and their ability to present the facts I mean, a lot of them present the facts in a very roundabout way, and I sort of look at these information disclosures and try and make head or tail of them, and you know when they're accurate and you make head or tail of them, you can make profit. But when you make head or tail of them, and then the assumptions you've made, which you should, like, these are our cash flow forecasts, and then the cash flow forecasts change dramatically, like really dramatically. It's like, well, how's that changed? Why is that changed? Well, there's no explanation. Like, it just has. It's just not good enough. You cannot. Um, but luckily, a lot of the time, that is the exception and not the rule. So, yeah, I was quite. I got to a point where I just said, no, I'm going to wash my hands of this one. This is not there. There's something weird going on with their disclosures, and I, yeah, just don't trust the numbers now, and that's proven, I guess, to be the case. But obviously, looks very attractive, I guess, because obviously you're looking at that going, oh, goody goody, 72% discount. Couldn't get, well, it could get better because Digital Nine's on a larger discount than that. But yeah, for me, those assets are yeah, just haven't proven to be very reliable. Anyway, that probably sort of, yeah, just I did only mean to just quickly reference, and I sort of have ended up creating a video talking about this Article 500. But it's, I think it's very, very healthy to talk about your worst performers. It's good to, it's what I call the Ephialtes, keeping with the Spartan theme, that that you've got to sort of acknowledge those creatures under the stairs. One of the things that really irritates me, actually, is people that crow about their successes, and they just sort of quietly pretend the failures never happened. Whereas, like, if my track record was just continual losses, I'd rather just say that rather than sort of go, oh well, 1 out of 100 double bagged, and that's the only one I'm going to talk about. Like, let's just pretend the 99 didn't happen. I mean, people are not stupid. I mean, they can sort of go back, you can go back to anyone else's articles. And I mean, like, and even the brokers, I mean, don't get me started on those, but, like, actually, if you go and sort of look at, I mean, I've done this once or twice where I've looked at past broker notes and sort of said, well, hang on a minute. Back in 2021, they said this would happen in 2022. You go and look at 2022. Well, it didn't happen. They said in 2022 this would happen in 2023. Well, it didn't happen. And, like, I think nobody seems to hold those to account to the same standard as sort of people like me, which I find annoying, because at the end of the day, um, yeah, there's quite often sort of a blind eye given to, or at least people say, oh well, they're there to sort of marketing communications. Well, I'm not a marketing communication. Like, I'm just talking my own. I am talking my own book. I obviously, what would be the point of me talking about things that I've got no or no involvement in? So I am a private investor in a lot, not all, but some of the, and sometimes it'll just simply be that readers will say, well, would you look at such and such company and tell me what you think? And I'll sort of go, well, yeah, I'll put it on a list, and like, eventually sort of look at it, or if it intrigues me, I'll look at it sooner. Or, it's often the way that, and actually some of my own best investments have been readers who have said, like, well, I think this is a great idea because of X, Y, and Z, and so it's proven to be a great, like, I'm trying to think of some examples. I mean, Harbour's one that sticks in my mind, that there was a few people that said over quite a long time, like, oh, would you look at Harbour? It's very similar to Diversified, and obviously that's a good way to tempt me because I've spent a lot of time looking at Diversified, and I suppose if you look at one type of company, you can sort of see the parallels and similarities to a similar or another company in the same sector. So, not that I'm from the oil and gas sector, or don't, never been on an oil rig in my life, but you do get to sort of understand the drivers to some of these companies, and also the I suppose the difference between an oil explorer versus a producer. And I suppose I've kind of learned over my years to take a lot of the stuff around the explorers with a great huge pinch of salt, not a micro salt pinch of salt, but a big sea salt crystals pinch of salt, because um the risk around exploring is just very, very high. And it's the same with gold explorers, just the same. Like, I've got probably 90 80 90% of my gold holdings are in producers and not explorers. And it's not exclusively, but I'm much more comfortable in sort of saying, well, look, let's either look for ones that are producing and are going to increase their producing, and you've obviously got the leverage upwards there, or you've got the ones where you've got the they're not producing. I mean, Kavango is a good example of this, where they're not, well, they are producing, but they give their numbers in kilograms, which I think is sort of like slightly foxes the market, because like, it's funny because we all understand grams per ton of gold in the ground in grams per ton, but production is always in ounces. It's sort of, I suppose that's sort of a British thing, that we kind of talk about. I'm 5'11" tall, but I weigh so and so kilograms. Like people do, don't they? They sort of interchangeably use imperial and metric depending upon what you're talking about. Like, you'd sort of say, oh, I want a pound of sugar, but I weigh this many kilograms. And it's just how we are. I mean, it's just one of these funny things. So anyway, when I converted the Kavango production into ounces, it made sense to me. It was 59 ounces in the month of April. And that was up from about 30 ounces. So they'd managed to double their production. Um, my anticipation is that they're going to double that, and increase that by more than just a doubling. Um, and they're putting in measures, and they've raised finances. Whereas, back when they were an explorer, and obviously people get hung up with shares where they, like past failure or past success kind of puts blinkers on them. Like, because it happened this way in the past, it's going to happen this way in the future. And actually, the management of these companies can also be similarly blinkered. That they dig a hole, it fails, but they sort of, that's what they're into digging holes, so they'll dig another hole and then that fails. Whereas I think the difference for me with Kavango is that they went and dug this, or they did a load of research in the KSZ, the Kalahari Suture Zone. 800 meters down, there's wealth and riches beyond imagination. The magnetic signature sort of strongly suggests that there's vast amounts of mineralization. They actually go and spend millions and millions digging this very, very, very deep hole. And obviously, the deeper the hole, the more expensive it gets, and the more complex it gets, and the more time consuming it gets. And all sorts of reasons why. There's a reason that people don't dig very, very, very deep holes, but they sort of did. And to be fair, if they'd struck gold, or struck, I mean, in their case, it was going to be PGMs and nickel, then the market would have been delighted, and they would have been the best thing, and they would have been vastly rewarded. As it was, they didn't strike. They struck iron ore, which was the magnetic signature. And I suppose that was the frustrating thing, was that people said, well, like, why did you not know that like, the magnetic signature might not be the magnetic signature of, I mean, presumably of nickel or ferrous nickel. I don't know the precise. Again, I'm not a geologist. So everyone, everyone had a big Debbie Downer on Porcavango, and myself included. I mean, on the news, the care said I sold out of it. I was like, oh, never darken my door. Um, and then I saw, oh, they're reinventing themselves in Zimbabwe. I thought, oh, I wasn't I was not at all happy. But I guess the thing that during 2024 that I had a change of heart was just the focus. Well, there's a couple of things. I mean, the there was a load of talk of, oh, we've got a cornerstone investor that's prepared to pay 1p a share. And this was back when I think the share itself was 0.6 of a p. And I was like, well, why would somebody do that? Like, that intrigues me. Like, why would somebody pay like 1 2/3? Surely that's just nonsense. That's not going to happen, because, like, why would an investor do that? That doesn't make any sense. But they did. I was like, okay, so they've gone and spent millions over the odds for no good reason. Well, but there must be a reason, like no good reason. I mean, I went and looked at who they were, and okay, yeah, actually, they're past. And I went looked at their accounts, their past accounts. They've made very large profits. Okay, started to the clock, and I don't know what made me sort of. It was just that intriguing loose thread of like, well, what? Why would you invest over the price of the company? And it was this comment of, well, we shook hands on 1p a share, so we're going to honour it. I mean, when do you see honour in these sorts of transactions? Not often. Like, is it just because they are honourable people? Maybe, I don't know. I don't know them. I've never met them, but I mean, the reason to pay over the odds intrigued me. So anyway, I sort of thought, well, okay, let's start looking into this. And I started looking at Kavango, started looking at what they were doing in Zimbabwe, and it was kind of late last year. I mean, it was, I think Kavango was idea 23 in my 25 for 25. So it was a very late idea, and I think it was even in December that I was starting to kind of look at it and go, do you know what? Actually, and I was looking at, I was aware of um, the guys, CMCL, the Caledonia folks, and they've operated in Zimbabwe for years. I started looking at the history of Zimbabwe and how much gold used to come out of Zimbabwe, and like how much gold could still be there. I mean, looking at it from a geology point of view, you kind of go, well, gosh, yeah, actually, that's a that could be a great opportunity. And all the pizzazz and all the, oh yeah, this is the best thing since sliced bread. Actually, yeah, it kind of does look like the best thing since, it did look very positive. And of course, uh late last year, I mean, gold prices were going up, so I did sort of, and I did face a big quandary, actually, because and I had a long conversation with somebody about this, where I said, do you know what, like, if I was sort of braver, uh, I would just go and pick 25 or however many. Maybe it wouldn't have been 25, but I was thinking in terms of, well, if the gold price continues to do what it's doing in 2024, because for a long time I'd sort of felt, well, the US are printing money like there's no tomorrow, but there always is a tomorrow, and there's a reckoning. There's like interest rate tantrums and different things. Plus, there's the deficit, and that deficit just doesn't seem to be going anywhere. The Chinese are selling far more into the US than the US are selling into China, and the same thing's happening in the UK. And these trends, or these things have got to kind of, there's got to be a day of reckoning. So all the quantitative easing, lots and lots of reasons why. For a long time I've kind of looked at it going, well, it doesn't feel right. It feels like it's defying gravity. So the events that have happened this year. But anyway, going back to, there was a large part of me that was tempted just to go for sort of lots and lots of gold miners. In the event, I went for Thor and I went for Kavango, and both have proven to provide a huge return in 2025 so far. Although I don't think Kavango has really got started. I mean, Thor's obviously gone up a lot more, but also has been able to tangibly show fantastic results. A very, very low AISC, a very, very strong gold price, very accomplished, and also when they announced, like, oh yeah, we're going to just start paying people 2.7p a share dividend, and I think at the time the share was at 21p. I mean, it was like, well, we're going to announce a 13% yield because we've got so much cash. We just want to reward our shareholders. I mean, how lovely is that? And of course, the share price reacted by jumping from 21p to about 35p, although it's back now at about 32, I think it is. So it's you're getting something like a 9% dividend yield, even with the price going up. So and obviously with gold being at about 3.3 and the AISC, and this was the other thing, that the AISC came through at what, below 1,000. I think the AISC is about 850 an ounce, which is incredible, incredibly profitable. Anyway, look, I just realized that we're at 46 minutes, and this was meant to be a sort of a 2 minute just referencing quickly, and me being nostalgic that ONDO InsurTech was going to be article number 600, and of course this one was article 500, where I sort of did a bit of a review of past ideas. So I've done an Oak Bloke 25 for 25 idea was my past video. This one's a more holistic sort of looking back on 600 articles. Well, just a few of 600 articles really, but yeah, anyway, I'm going to leave it there for now. I am going to do another video which will just be on ONDO InsurTech, so you can come back for that if you want to. And this is Oak Bloke signing off for now. Cheerio for now. Cheerio.